Hi, this is David Beach with Crestmont Investments, and I'm here today with Peter Kaufman of Gordian Group, talking about what to do now with the current COVID shutdown and its impact on family office investments. Peter, in your view, what in the world has just happened over the last 2 months?
Well, it's been fascinating as an investment banker who only deals with advising boards that have capital structure challenges. The world has caved in, especially if you're a consumer-facing business directly or even indirectly. The government is trying to prop up businesses and workers, but what the government can't do is create demand. And right now, there's just no demand. And my crystal ball is no better than anybody else's. I think until and unless there's a vaccine, I think demand is going to continue to be tamped down. The credit bubble has burst as part of this. For 10 years, plus or minus, a whole lot of money was available to companies that in other cycles would be undeserving of it, and they've been able to refinance their capital stack, sort of kick the can down the road, and that game is over. And right now you have a really interesting dynamic between lenders and companies, private-owned companies, private equity sponsors, family office backed, public companies. And the tension is as simple as this. Everyone's shell-shocked. The lenders don't know what to do. What they'd like to do is to keep the borrowers on a short leash, 60, 90, 120-day forbearance periods, with more equity coming in below what we would call mount debt, because these companies almost uniformly can no longer support the amount of debt that they've taken on because the bottom has dropped out of revenues and, of course, profitability. On the other hand, the companies, whose crystal ball is no better than anybody else's, wants a couple years of free runway where they don't have to look over their shoulder about what happened last month or what's going to happen this month. And they'd like arguably 2 or 3 years of almost covenant-free relief from the usual reporting requirements and the usual tripwires that lenders have to keep an eye on their borrowers. That's where the tension is. And what we do for companies in this situation, because we're the only firm in the restructuring space, the only investment bank that doesn't represent financial creditors, banks, bondholders, et cetera, is we figure out strategies to make the lenders do what the board wants them to do. And these strategies are often, not always, but often bankruptcy centric, meaning every one of these situations views the world through the prism of what can they do to me in a bankruptcy? What can I do to them in a bankruptcy? And when we go to the lenders with bespoke solutions, depending on what the particulars of any given situation are, we show them strategies that we're prepared to carry out in Chapter 11 that they'll like a lot less than giving us 2 years runway. And that almost always ends up with an out-of-court solution that is amenable to the board of directors trying to look out for shareholders.
So if I'm a family office who has all of a sudden seen a profitable investment or a successful company now face bankruptcy or other insolvency or some other sort of distress, any quick fixes, or what would you advise, or what's your thoughts to that family office?
Other than call me, there are no quick fixes, but the shareholders and the board needs to always remember that shareholders have two things going for them at any given time. Number one is option value, which is time and volatility. And number two, control until they don't. So even when things look dark, there are almost always strategic options available to companies and shareholders who have the will to deal with their creditors in a way that will turn out advantageously for the company and the shareholders.
Okay. Well, thank you very much. Any parting thoughts to equity holders right now, or besides call Gordian?
Keep the faith, get great advice that's unconflicted with your creditors, hope for a vaccine soon, but hope isn't a plan. You've got to make do with the cards on the table. And we usually find that a well-advised board looking out for shareholders is usually more nimble in times of uncertainty than our more vanilla lenders.
Great. Well, thank you so much, Peter. And I'm sure we'll be seeing a lot of activity in the weeks ahead. Thank you so much.
Thank you, David.